In this short video, we will discuss binary options. We will first define and describe the binary options market, and then move on to discuss the specific risks that are associated with trading binary options. We will examine the growth of the current market for these products and how investors can use these products to speculate and hedge risk exposure. A binary option is an all or nothing option. There is no middle ground. You either make the expected payout or you don't. Hence the name binary option. A binary option has a predefined payoff. For standard options, the payoff is unknown prior to exiting the position and can only be determined upon exercise of the option or selling of the option. In contrast, a binary option has a predefined payoff that is used. Investors can take profits on binary option which change the payoff profile. A payoff of a binary option is a preset value and is known as cash or nothing. If it expires in the money, the investor receives a specific face value, and if it expires out of the money, the investor receives nothing. The chart here is the payoff of a binary option with strike K. At K, it's a full payoff. Below K for a call, it's no payoff at all. The components of a binary option are similar to those of a vanilla option. There is a strike price, which is the level at which the option holder has the right to receive a payout. It is the most straightforward input and, as always, can be given by within an option contract. In general, the market price or the current price in a binary option is also the strike price. In or below or above binary options, the market price is the price that is used specifically to determine the strike price. The time to maturity in binary options can vary. For binary options, it is usually at the end of the day or the end of the week or the end of the month, but there are binary options that can be hourly. The interest rate component is the risk-free rate of return until the option expires. The risk-free rate is usually specified as a treasury bill. Volatility is probably the most important single input into any pricing model. Implied volatility is how much participants believe a security will move over a specific period of time on an annualized basis. Binary options have a number of benefits. For investors who are looking to take specific directional bets on a financial instrument is one of the best ways to accomplish this. Using binary options gives you the flexibility to just choose either up or down. Binary options, which are known as all or nothing options, allows investors to speculate on the direction of a financial instrument without paying a significant premium. Binary options are also excellent tools to use around specific events, such as economic data points or earnings releases, where the market will move quickly. Usually within binary options, the payoff profile is the same whether the market moves slightly in your favor or very large amounts in your favor. And that is one of the benefits of those particular types of options. The CBOE binary options are regulated options and are a pure and simple way to trade based on the opinion of where the market is headed over a certain period of time. They are contracts that at expiration pay a predetermined fixed amount of payout. The payout amount for a CBOT binary option is $100. Like traditional options, binary options are based on the underlying security and have various strike prices to choose from as well as various expirations. CBOT lists both call and put binary options If an expiration price of a binary option security closes at or above a selected price, the buyer of the call binary option receives the full $100 contract. If the underlying security closes at or below the strike price on the expiry date, the binary option purchaser receives nothing. In the case of a put binary option, the put buyer receives the $100 contract if the underlying security closes below the strike price of the binary option, and nothing if it closes above that strike price. As with traditional binary options, a binary option can be liquidated prior to expiration. The price of a binary option usually reflects the perceived probability that the underlying security price will reach or exceed a specific level. The CBOE binary options should provide straightforward ways for investors to act on the views of two of the most closely followed indexes in the world, the S&P 500 and the CBOE Volatility Index. They do not have binary options on currencies or commodities. The CBOT binary options are cleared through the Options Clearing Corp, and they can be traded as regulated securities accounts that approve to trade options. Binary options have become a very popular way for retail investors to speculate on the direction of an underlying instrument. There are numerous online retail brokers that offer binary options on assets ranging from individual stocks to indexes, commodities, and even currencies. Binary options brokers usually have their fee embedded in the price of a binary option. The brokers will usually give customers a payout of approximately 85% while collecting 100% if you were incorrect. Given that these brokers do not lay off their risks and their positions in the marketplace, they make their money on the theoretical bid offer, which is that 15% that they do not give up. The risks of binary options can be hedged with vanilla options, but they are very difficult to hedge with the underlying delta. Given a binary option is an all or nothing option, the delta can change to all or nothing around the strike price. These type of options can be hedged using very tight calls or put spreads for market makers.